This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, January 14th, 2015. Euro dollar. So a little bit of relief in recent sessions with the market trading just over the 1755 9-year low, but setbacks are expected to continue with this market locked within a very well-defined downtrend. The next key target for the market comes in by the 2005 base at 1640. At that point, we could see a bit of a bounce, but ultimately any rallies are expected to be very well capped in this pair with only a break back above the 50-day moving average to compromise the bearish outlook. Sterling dollar. Cable has seen a little bit of a bounce in recent sessions, but again, the overall trend here remains firmly to the downside, with the market expected to take out recent support at 50.35, the 18-month low, and trade down towards the 2013 base, which comes in at 148.15. Ultimately, only back above the 158 area would compromise the bearish outlook. Dollar yen. Dollar yen is in the process of pulling back over the past several sessions, but the market has seen finding some very good support in the 115.55 area. Only a break and close below 15.55 would take the immediate pressure off the top side, with the overall structure still intensely bullish. A break below 115.55 would suggest that the market could see a more significant corrective price action, but again, a higher low will be sought out in favor of an eventual bullish resumption back towards the recent 7-year high at 121.85. Euro Swiss. Euro Swiss continues to hover just over major psychological barriers at 120. A break back above 2045 would confirm the basing prospect and open the door for additional upside, while inability to do so will continue to keep the pressure on the downside with a potential breach of 120. Aussie dollar. Aussie dollar is in the process of consolidating recent declines off fresh multi-year lows after the market stalled just ahead of psychological barriers at 80. Any rally should continue to be very well capped in this market towards the 83 area, while a break back below 80 would open the door for a move down towards 75. Dollar CAD. Dollar CAD remains locked within a very well-defined uptrend, with the market recently taking out key barriers at 120. But again, daily studies here are quite stretched, and then we could see a bit of a pullback over the coming sessions. Look for a break and close back below 1925 to confirm the onset of a short-term correction, from where a fresh higher low will be sought out somewhere in the 116 area ahead of a bullish continuation. Kiwi dollar. Kiwi dollar remains locked within a multi-week consolidation, with the market still locked within a consolidation within a more well-defined downtrend. Ultimately, a break below the recent 2014 low at 76.09 is anticipated, with the market expected to trade down towards the 72 area over the coming weeks and months. Only back above the 80.35 level would compromise the bearish structure. S&P 500. The S&P 500 is looking like it wants to carve out a major top, with the market recently stalling in 2014 by record highs just shy of 2100. A break below key support at 1968 will now be required to confirm topping structure and open the door for an acceleration of declines. Gold. Gold has recently traded back up towards critical resistance in the form of the October peak at 1256. A break above 1256 would suggest that the market is putting in a major structural shift, while inability to do so will keep the pressure on the downside, with a focus potentially back on those 2014 4-year lows at 1131. That's all for today.